This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks just paused as a blistering earnings season comes close to an end. The S&P 500 slid 0.4% between Friday, February 2nd and Friday, February 9th. It was only the second decline in the last 16 weeks, according to TradeStation data. Technology led to the downside as investors sold large growth names like Microsoft, Apple, and Broadcom. The sector faces a potentially big test tomorrow afternoon when NVDA reports fourth quarter results. The designer of artificial intelligence chips as the S&P 500 seconds top performer this year, having passed Alphabet and Amazon.com in market capitalization. Notice how implied volatility has increased before tomorrow's report. That shows the options market pricing in the chance of a big move. Last week also had bad news on inflation, with the Consumer Price Index and Producer Price Index both rising more than expected. Services like rent, insurance, and healthcare drove the increases, which could potentially delay interest rate cuts by the Federal Reserve. Energy was the main item getting cheaper, but could that be a risk if crude oil bounces? Bond yields jumped to their highest level since the beginning of December in response. Retail sales also missed estimates for the first time in 7 months, and initial jobless claims were lower than expected. Still, investors are reacting more positively to results than normal. FactSet reported that companies beating estimates have risen more than average this earnings season, and misses have been punished less than average. Valuations have also increased as the market anticipates double-digit profit growth this year. Energy was the best performing sector last week as crude oil futures continued their rebound from $70. Diamondback Energy helped spur the gains by acquiring a privately held company that will make it the number 3 producer in the Permian Basin. Chinese internet stocks, biotechnology, banks, and solar energy also gained. All those groups have lagged in recent months. Gold miners and home builders fell last week as interest rates increased. Uber Technologies was another big mover after projecting compounded annual growth rates of 30 to 40% over the next 3 years. In addition, the ride-sharing company plans to buy back $7 billion of its stock. Dialysis provider NVDA also beat estimates and issued strong guidance. Akamai Technologies was the biggest decliner in the S&P 500 last week after results missed estimates. Last week also saw dramatic swings in Supermicro Computer, which had more than doubled after pre-announcing strong results on January 18th. The stock jumped another 46% through Friday morning, before reversing sharply lower and ending the week up less than 10%. Options volume increased dramatically during the move, as we see in this chart. And now let's chart the overall market. While stocks have steadily advanced since late October, some investors may see potential risks in last week's price action. First, the S&P 500 fell sharply after Tuesday's inflation report. It held a rising trend line and its low from the previous week. However, it failed to progress to a new high that differs from price action earlier in the month. Second, the index remained below the previous week's high around 50.30. Will that become near-term resistance? Could traders expect support at the recent weekly low around 49.18? Third, the 9-day rate of change oscillator has made lower highs as the broader market advanced. That could be viewed as bearish divergence. We'll now look at some upcoming events. This week could hinge on Wednesday afternoon, which brings minutes from the last Fed meeting and results from NVIDIA. Some retailers and housing stocks also report earnings. Today's items include results from Home Depot, Walmart, and Palo Alto Networks. Fed minutes are due at 2 o'clock Eastern Time tomorrow afternoon. NVIDIA reports earnings after the closing bell, along with Rivian Automotive and Etsy. Thursday brings initial jobless claims, existing home sales, and crude oil inventories. Thanks for watching. Please visit TradeStation.com for more.